Good morning, members, and
good morning.
Welcome to today's session of a first webinar conducted by the JB Nagar Study. All are requested to stay at home and be safe amidst the threat of the coronavirus. Our president and members, our president, Sri Atulji Gupta, has appealed to the members to contribute to the COVID-19 relief fund, and which he will in turn contribute to the PM Relief Fund. So, behalf of the JB Nagar Study Circle and ICAI, I appeal to all the members to contribute generously to this noble cause. Our speaker, CA Vikas Kumar, has also consented to contribute the amount to this Prime Minister's Relief Fund through our study circle. May I introduce our speaker for the day, CA Vikas Kumar. Vikas Kumar is a qualified chartered accountant with more than 27 years of post-qualification experience and overall more than 30 years of experience. He's a partner with TR Chadda & Company LLP since 95, and he has an extensive experience in bank audits, forensic audits, statutory audits, monitoring audits, business advisory services in various industries, and specialized in the financial services sector. He's a regular speaker, panelist at many conferences and seminars of ICAI, SEBI, CAG on various topics of bank audits and forensic audit. He is also technical reviewer of the Quality Review Board conducted by the ICAI and Government of India. He is also technical reviewer for the best presented accounts in India and SAFA, and member of the group for revision of the guidance note on bank audits. He is also a member of the group revision of the long form audit report of the banks. He is involved in the central statutory audit of SBI, Bank of Baroda, Canara Bank, IFCL Limited, and various other banking sectors and financial services sector companies. He's also done various inspections and special audits on behalf of SEBI, RBI, IRDA, etc. Now, may I request Vikas Kumar to please start this session for the benefit of all the members. Welcome, Mr. Vikas. Thank you so much for consenting. Thanks.
Thank you, Chintan Bhai. Thank you so much. So first of all, let me say my thanks to Chintan Bhai and JB Nagar Study Circle for inviting me over here. The good thing, friends, is that there was a plan wherein we had to give this lecture, or we have to talk on this earlier, which could not happen because of this coronavirus. But kudos to JB Nagar Circle that at the same time, same topic and same presenter is there with you to talk on the same thing. So the kudos to JB Nagar Study Circle, and thank you very much for inviting me, and congratulations for starting this new webinar for the benefit of all the members. I'm sure this will be of a lot of use to everybody. Friends, among us now we have this virus problem, coronavirus. So to me, it's not only coronavirus, but it's all the negativity which is coming across out of this, which is creating more of the problem. We have to stay safe. We have to play safe. We have to maintain social distancing. We have to maintain the government guidelines. At the same time, we all have to keep ourselves positive and make sure, understand and keep in mind that yes, this all will go away. So this step also of JB Nagar Study Circle of having this webinar is going to bring that positivity around us, that we start thinking and talking on what is more important to us rather than only corona. So thank you very much, and we look forward to this. Friends, we cannot have so much of the interaction today because we are not sitting one-to-one, but what we can definitely do is that I'm going to talk, and in the end of it, we'll try to finish it a little early so that whatever questions you have, you can send it across on the chat, and I will try that whatever questions I can answer, whatever you have, I'll try my best to do that. I hope you all are able to hear me properly. So we will now start with this presentation on the bank branch audit. Friends, I think so far as the bank audit is concerned, we all are aware of the importance of the same. You can even see that nowadays also the entire focus is on the banking. People are talking on the banking. And when we do the bank audit, of course, the most critical thing which comes across is primarily the loans and advances, the advances given by the bank, because that is the core, that is the heart of the bank. And now today we are going to talk on the loans and advances. That is the subject given to me, that with regard to the banking industry, the loans and advances. What do we look upon? How do we look upon? How do we really go about it? That is what we are going to discuss. So key things will be that what are the advances? How do we do the planning? What are the pre-sanction, post-sanction, post-disbursement thing which we are required to do? What are the specific areas for verification? I'll also talk on some of the questions which we all come across during the course of our audit or even otherwise. What are the key things which we have to keep in mind when we go for the audit? So we'll talk on all of that, and then we'll talk on the reading materials. So this is what we are going to do today. So I'll start with the audit planning, friends, because when we go for the audit, it is very, very important that we plan the things properly, plan the things in advance, which will help us actually to see to it that we are able to cover what we are required to cover and within the timeline which we have, because the time which we get in the bank audit is not sufficient, is not something where you have the luxury to go there, discuss there, and then plan and then execute. So it is important that we do the planning much in advance. We have a visit to the branch before starting to understand from them. So all of that planning is required. So what are the key things which are to be seen from the planning perspective? My suggestion would be, the first one is that we must update ourselves with the RBI guidelines, RBI notifications, RBI circulars, RBI directions. We all have been doing bank audit for long, and broadly we are aware on the RBI guidelines as well as most of the other norms. But it is always good to refresh yourself. It is always good to see that what are the updated things which has come across, that many times those things might be missing our attention basically. So it is important that yes, we go through the RBI notifications, circulars and directions. Then we need to have some idea about the internal control mechanism which is prevalent in that bank, especially in that branch for which you're going to do the audit. If you're there as a central statutory auditors, then for the bank as a whole, or if you're a branch auditor, then from the branch audit perspective, what is the internal control mechanism? That, in my view, is important to be looked upon. So as I was saying, that first day or a day, which can be in advance of the start of the audit, if you can visit or if you can plan to visit a branch and discuss and understand certain things, that will really help you to plan and understand and do the things much better. While going to the branch, like as I've said, you have to see the internal control mechanism. You can also see whether the branch dependence is there on some limited number of borrowers. If there are few borrowers from which the major income of the branch is coming, naturally there are chances that the people at the branch or the branch manager may get a bit influenced by such type of borrowers. They might think that they are the large ones, they are the ones where the things are going fine, and in the process they may be a little accommodative with them, which can create issues later on. So check if there is a branch dependence on limited number of borrowers. If yes, those borrowers become very, very important to be seen more in detail. Then the second thing we need to understand while talking to the branch people, is there any problem of over familiarity? In a sense that there is some client which is there for the last many years. They have been dealing with the branch or the bank in a particular fashion, and things have been going on. So it works as a legacy rather than as a process of control. So the people at the branch are like as usual, deal with them in a similar fashion. Even if the new people come, they inherit what has come from the other branches, and then that becomes a problem of over familiarity. I also suggest every time that whenever we have to do a branch audit, we must obtain the list of their major borrowers in advance and do some background review of those borrowers in advance, rather than only when you go to the audit and you start seeing the files. That is something which you will of course do. But important is that if you know the profile of the branch, if you know the profile of those borrowers in advance, you do some research on it, you do some working on it. A lot of things available on the web nowadays. So if you do that, it helps you to plan the entire stuff in a much better manner. You know where to focus, which are the borrowers to focus, where and how you have to plan about it. Then another important area which I feel is we must look upon the type and the nature of borrowers, because there are some branches which deal with a specific type of industry, or in that area there are specific type of people or specific type of industry which are there. Like there are branches who deals only in diamond, so they have the major clients in diamond. Suppose there is a branch which is in a particular area and that area is mainly having steel traders. So naturally, that branch will also have more cases or more borrowers of the steel traders. So try and understand that. Try and understand which are the industry services that branch is generally catering, and then you can again do the planning much better as compared to other ways. So this is with regard to the audit planning, which I feel and I suggest we must look upon. Of course, yeah. Another thing is we need to be aware on our audit standards. Standards on auditing is given by ICAI. Our auditing has to be based on standards on auditing given by ICAI. So it is good and it is better to refresh ourselves with all those standards on auditing which we have to use during the course of our audit. So those standards on auditing have been listed here like SA210 with regard to the terms of audit engagement. We need to ensure that we enter into those terms of engagement in time and properly and in tune with what the standard talks about. Knowledge of business SA310, that is another important area which we need to be aware and which we need to work, understand and do that in advance. Risk assessment and internal control, that is SA400. Again, that risk assessment needs to be done before you start your work and maybe updated during the course of your work. So that is required to be done. So all those areas which are there basically with regard to standards on auditing must be taken care of and should not be missed upon. SA530 on audit sampling, SA300 on audit planning, quality control for audit work, documentation, audit evidence, representation by management, all of them will have to be looked upon. Materiality becomes very, very important during this course of our audit because we have limited time, we can't cover everything. So we need to judge and understand how do we really decide on the materiality and how do we really go about it. So this becomes very, very important, friends, to be seen and to be taken care of during the course. Then we go to the next one, that what are the key information which we require from the branch when we start the audit or before we start the audit. I'll suggest some of the things which you must take. First of all, take the top 10 borrowers or top 10 exposures where they have. And when you do this, don't do it only for fund-based, which is reflected primarily in the balance sheet, but take it on an overall basis, that is fund-based as well as non-fund-based. So overall exposure basis, take the list of top 10 borrowers of the branch. Obtain the list of the stressed account, because that gives you the idea which are the accounts where you have to focus upon. So now there are clear guidelines on SMA 1, 2, and 3, which you are going to talk upon later. So check the list of all SMA 1, SMA 2, and SMA 3 accounts from the branch, which will give you better understanding. Obtain the list of the restructured accounts. That is another important one, that all the cases which have been restructured by the branch during the year, as well as all the cases which are restructured and standing there as a restructured cases as at March end, we need to obtain that list from them. If there are any other bilateral or CDR, SDR cases, S4A cases, then we have to take that. Then I always suggest that our focus on other advances should be primarily on the unsecured ones. Secured ones, still banks have something that if something goes wrong, whereas in case of unsecured ones, it becomes very, very difficult. So obtain the list of unsecured exposures beyond a cutoff limit, say 1 crore or 2 crore, depending upon the size of the branch, or 50 lakhs, again, depending upon the size of the branch. Take that list and then try and see which are the ones where we need to go through and focus more. So even if you don't get any sign, some of those unsecured exposures, some of those unsecured borrowers, you must see in detail. Another aspect which I always suggest is early mortality. What is early mortality? The case which have been disbursed and within 12 months, there is sign of sickness, the account is becoming NPA. All those are early mortality cases. So those early mortality cases, again, you have to take the list, see whether the processes have been followed properly in those cases, or you need to report more with regard to those cases in your LFR or otherwise. So that again needs to be seen more in detail, and the list to be obtained, details to be obtained, and the audit program has to be focused accordingly. So these were the 3 slides which I thought I'll talk on the audit planning side. So once you are planned and once you know that where I have to focus upon, it will definitely help you to really go about doing an effective audit much better way. Now we move forward, friends. If you have any questions, you can keep it putting on the chat. There is no problem at all. We'll take up at the last once this is completed. But if there is any thought coming, it is better to put it in chat now, because otherwise by the end of it you might not remember those questions. Okay, so to go forward, what type of advances are generally there? Broadly, it is in two types. First is funded, second is non-funded. Funded means what? Where there's an actual outflow of cash, where the banks have given the actual money, right? And the non-funded ones are those where actual money has not given, but there is a commitment which is given, and if those commitments are not fulfilled, then in that case it will become an actual outflow. The bank will have to pay the actual money, so it will become an actual outflow and it will turn into a funded facility later on. What are the types of funded ones? Which includes overdraft or cash credit, term loans, which will include all type of term loans, whether it is a mortgage loan, vehicle loan, home loan, or whatever it is, working capital demand loans, bills, which are bills purchases, discounted, foreign bills, packing credit. So all those are certain types of funded advances, whereas non-funded will include guarantees, letter of credits, and all that. I think you all are aware. Friends, let me again repeat for the sake of repetition. We all are aware on major areas because we have been doing bank audit for long. So I know that. I am fully aware that you all are aware. But still, it is better to refresh ourselves. It is better to relearn the things which we have already learned, right? Now, we go on the major areas of our focus or major areas of our consideration as to what are the key things which we are going to look upon. I would like to bifurcate it between three areas. One is pre-sanction, then pre-disbursement, and then post-disbursement. So these are the three areas in which it gets bifurcated. What are the key things which you look upon? We'll discuss in detail, but the key things are like how the application processes, whether the credit appraisal is happening the way it is designed in the bank, the way it is required, whether the sanctioning and the disbursement is happening as per norm, documentation is done properly, and then after post-disbursement will include the review of the monitoring, asset classification, provisioning, income recognition, restructuring, etc., etc., etc. Right? So we'll take up now one by one what are the key things and how do we really go about it. So far as the pre-sanction area is there with regard to the application, how does it start? Any person who is wanting to borrow money will have to make an application to the bank. This process starts from there. So we have to first check whether there is a proper application for any fresh or renewal proposal. We don't have to see for the older ones, but the cases which have been sanctioned during the year, or the cases which not even sanctioned during the year, but you want to have a look on those processes, how those have been rejected or not sanctioned, basically, you can see that. So once you do your sampling of the cases which you are going to review, of the amount of these cases which have been sanctioned during the year or which have been renewed during the year, or where the application will received during. Yeah. So basically, wherever you find that there is, once you decide on the sampling, then you need to check on those samples end to end. In a sense, starting from the application stage, you need to check whether the application was given in the proper form, whether the KYC as per RBI requirements have been done or not, whether the evaluation of the latest audited financials, the company must have given their latest audited financial statements, whether those have been evaluated while looking upon, whether the project reports, projected P&L, balance sheet and cash flow has been provided, have been looked upon, whether the entity has provided the board resolution for the facility, income tax records of the borrowers and guarantor. In fact, initial stage, it is easy to get all these details from the borrower because he has to get the money from the bank. He's needing the sanction, he's needing the disbursement, he will provide what the bank is asking for, which in later years become a challenge. So it is important that whatever details, documents are required from the borrower must be obtained at the initial stage so that you have all those details and information. So the income tax records of the borrower and guarantor, all the registrations, licenses and permits, all those things and various other aspects which is required as per the bank norm needs to be taken at the time of application itself. So the auditor must see at the first stage that yes, all those details, informations were obtained and taken and seen by the bank before even looking upon the cases. Once the informations are received, then the next stage is the credit. So whether the appraisal has been done properly or not, it needs to be looked upon. So it starts with what is the policy or the process in the bank. So we must be familiar with the policy of the bank first. That what is the policy of the bank in this regard? How do they look upon? What are the delegation of authorities? Once you make yourself familiar with the policy, you will be able to check those cases, whether those appraisals and other stuff has been done properly or not. So what are the key things which can be looked upon is whether the appraisal note of the bank is proper. Is it done in tune and in line with the bank policy? Whether the appraisal is done by the competent authority. So the person who has been doing the appraisal, I'm not talking of the sanction or disbursement, I'm talking even at the appraisal stage, whether it has been done by the right people or it has been done by somebody else who is not having that knowledge or not having that authority as per the policy. So you check, please check that whether even the appraisal, because appraisal is the critical part. If the appraisal is done properly, then the things are expected generally to go properly, except for changes which happens in the industry or in the company in future, which we don't know. So appraisal is a very important part. So we need to see that whether the appraisal has been done by the right person, by the competent person, by the competent authority. Then how the appraisal is done? It is primarily on the projections that what is going to happen in future. There are some parameters or something which is there at present that this is what has happened, this is what is happening, this is what is expected to happen. Expected to happen is always something which nobody can predict, but at the same time one can be realistic into it. So we have to see whether those projections are realistic. I'll only say apply your common sense. Apply the parameters which is there for the industry, apply the parameters which is there for the country. We don't have to do a very any large scientific research. Only if you apply your common sense that okay, somebody is talking about increase by 50%. Is it logical? Is it happening in the industry? How is this company going to achieve if nobody else is achieving it? That is a question to be pondered upon if there are such projections. So please see if there are any such projections, whether those are realistic or not. So once you go through the projections, the next important item which comes into the play is what is the net worth statement of the borrower and guarantor? What is the capacity of that borrower? What is the capacity of the people who are guaranteeing it? And what are the details, documents, and evidences in that regard? As I was saying earlier also, like income tax record, similarly, the net worth detail, if we take now, we get it. It becomes difficult to get it later on. That is our general experience also. It's not only theory, it's a practical experience we have seen that it becomes very difficult. And later on, if something goes wrong and you want to recover money from the guarantor or the borrower, many times you're not even aware that what are the assets, what are the properties which they are having, because they have not disclosed it properly. So they are just given a figure and you have not taken those breakups and the details in writing with evidences, it becomes difficult later on. So we must see that whether net worth statement of the borrower and the guarantor has been obtained and with the related evidences and which is available with the bank. Confidential report and NOC from the existing banker. If there is already an existing banker, we must take the confidential report. The title clearance report. Valuation report from registered valuer is generally something which is required, as well as the title clearance report is required. Nature of securities. What are the securities being offered? And whether those securities are something which seems fine, whether this covers the security cover, whether those securities are such which can be sold in market as and when required. So those are the things broadly which need to be looked upon at that point of time. Next will be the ratios. Financial ratios becomes very important whenever we are doing a sanction or a disbursement, whether that company deserves or not. Apart from various other parts, the financial ratios become very important, like debt equity ratios or the coverage ratio and all that. It becomes really important to be looked upon when you do the credit appraisal. Going further on the credit appraisal itself, we have to see the credit worthiness of the borrower. How do we see that? We have to obtain the last audited financials. We have to see that what was the net worth. Is there any audit qualification which could have impact the net worth of the borrower? So all those parts we have to see. We need to ensure, or rather bank needs to ensure, and we need to check whether the sanctions which is proposed is within the exposure limit of the bank. Exposure limit will be for borrower as well as for industry, and it has to be in tune or in line with the policy of the bank. So whether that is there or not, is this something to be seen. Then whatever industry which we are sanctioning, right, we must have some visibility, or the bank must have some visibility with regard to that industry. as to what are the prospects of that industry, what are the prospects of that business. Is that a growing one? Is that a negative list one? So generally the banks have a process whereby the negative industry list is sent to all the branches, saying based on the overall research done at the bank level, they feel that these are the industry which are the negative list. So those negative list things is something which should not be done, or which should not be taken up by the branches generally, except in some exceptional circumstances, if they can prove that, or they can clearly say and mention that yes, this is required. Otherwise, no. So the business, the industry needs to be looked upon. We need to see that whether the sources and periodicity of repayments mentioned by the bank, mentioned by the borrower, is fine, because cash flow is very, very important. That is the next point which I'm talking. So cash flow can make or break. Even if there are an asset, if there is a lot of mortgage given by the borrower, that is not good enough, because mortgage will come into play when the borrower stops to pay. Then only you will look upon selling and all that, asset selling and all that will happen, and that also takes time to dispose of, to sell off. So though the mortgage is important, though the security is very, very important, because that will help you to recover your money, but to minimize the chances of any account becoming NPA or to have any problem in the repayment, it is important that the cash flows have been seen properly. So business should be such, or the party should be such, and their cash flow should be such that they should be in a position to pay their dues on time, and they should be in a position to demonstrate that on the day one, that yes, these are the expected cash flows, and the bank must go through those projected cash flows in detail and satisfy themselves, and we should also look upon that. Another thing I always suggest is that there need to be a process whereby all the proposals received by the bank or the branch is being maintained and tracked, in a sense that, okay, in this month I have received 5 proposals, 2 have been sanctioned, 2 is under process, 1 is rejected. I must have a record of that. I must have a record that when I have received the proposal, when I have sanctioned or rejected it. One important thing which I have seen, the cases which have been sanctioned very, very fast, like 3 days, 4 days, 5 days. Is it happening because there was some pressure? Is it happening because there was some other aspect to it? Though the faster processing is recommended, I am not saying faster processing cannot be done. Whether the faster processing is only for some preferred cases or generally it is there, that can be seen. Similarly, if that detail or document is there, I have seen the auditors hardly and rarely see any rejected proposals. Their focus is always what has been sanctioned, what has been disbursed. But I can see that what are the rejected proposals, whether those have been rejected properly. If not, then that is also hampering the bank in a very negative manner, because you're not taking the right proposals, then you're just rejecting, and you are accepting something which you preferred or you wanted to sanction. So we must have a look on the rejected proposals as well. Then the credit rating of the major advances, whether the credit rating was done properly and has been seen properly at the time of the appraisal, needs to be looked upon. Of course, we will see the feasibility of the proposal technically and economically and commercially, whether the proposal is feasible or not. The banks generally have defined parameters for that. So whether those proposals fit in within those parameters or not, which can be looked upon. Now, once the appraisal has been done, right, now how do we really go before we disburse the money to the borrower is something which again becomes important. So my suggestions on that will be whether, first of all, whether the proposal has been routed through appropriate authority, their recommendations are properly documented and noted and acted upon also, that yes, whatever recommendations have been given by them have been documented and noted and acted upon, whether the limits sanctioned are within the discretionary power of the sanctioning authority. In case if it is beyond the discretionary power, whether this have been reported later on, ratified with the same terms and condition or not, and if there is any change, whether we have done it with the borrower or not, whether the change in the terms of sanction, that is another important part which I have seen. Many cases, friend, where you will find frauds happening or something which was not done properly. The experience says that at the time of sanction, there are certain good conditions which have been put into it. But what happens later on? These are supposed to be done before disbursement. These conditions have to be complied. But what in reality was happening was that in many cases, Once the sanction has happened, those conditions will be relaxed for certain periods, 3 months, 6 months, and the time will be given to the borrower to comply with those. And meanwhile, the disbursement will happen. And once you give money and those terms and conditions have not been complied, like say some security what was to be created. Before creation of security, you have actually done the disbursement. You have just given a relaxation to that security condition saying it can be done within 3 months, 6 months. Later on, it becomes a big challenge. It becomes a big challenge when naturally it will become a challenge when there is some ulterior motive of the borrower. So in those cases, it becomes a big challenge to get those securities then, which really impacts the bank and their recoverability significantly. So it is important that the change in the terms of sanction is being reviewed by the auditors. It needs to be seen whether this has been ratified by the same authority which has actually done the sanction or no, or the sanction is done by X, whereas the change in the terms of sanction or relaxation or time is granted by Y, who is not authorized to do it. That's not done. That's not. It needs to be reported. So that is something which needs to be seen. Look, whether the unit inspection prior to disbursement has happened or not is again important aspect which will have to be seen and to be done. Some of the other aspects, like if there are any ad hoc limits given to the borrower for some temporary season, for some temporary need, some seasonal activity, no problem. Based on the business, it can be done, but needs to be seen whether these are getting reported to the controlling authorities and whether this is being done as per the process or not. Same thing which I have been discussing earlier, but that before disbursement, all the compliances of all the terms and conditions as per the sanction must be looked upon, whether those have been done or not. Ad hoc sanction limits is something again which we need to see, because ad hoc, when the ad hoc is to be given, there are two ways, two things which is to that. One is that the ad hoc is required based on the season, based on the spurt in the business which was not anticipated earlier, or it can be asked by the borrower when they have stress. So we need to understand, or the bank need to understand, and we need to see that what is the reason for it. Is it because of the increased business? It is because of the seasonality of the business, or there is a stress because of which the borrower is asking for this ad hoc. And all the signs which brings the stress and the borrower being asking for ad hoc needs to be seen very, very carefully. So that is another important aspect. Acceptance by the borrower of all the terms and conditions before the disbursement is done is another important aspect. Sanction letter or limit approval letter needs to be there. Margin money. This is again very important, that the borrower must bring in margin money before any disbursement will happen. So say we have said that 100 rupees is sanctioned and the margin money is 30 rupees, the bank contribution will be 70 rupees. If the bank has to disburse 35 rupees, the borrower is asking, he must bring in at least proportionate amount, which is the 15 rupees in this case, which should come before the bank will disburse. In fact, in many cases, the banks put a condition that the borrower has to bring in the entire money before the bank disbursement will happen. So depending upon this condition, we have to see whether that margin money requirement has been fulfilled or not before the disbursement has happened. If there is any issue, it will have to be again brought it in the LFR. Next will be end use of funds. Only 4 words, end use of funds, but these are very, 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 very important, because this only defines that what really happens ultimately in future with regard to those disbursement which has happened. The funds has been utilized properly at the initial stage, chances of problem in future is much lower as compared to when the funds have not been utilized properly. How do we really see, and what do we really see in the end use of fund? To my mind, and what the banks also expect, not only banks, even the regulatory authorities and other people expect, is that the fund should be utilized for which it has been sanctioned. It is very, very clear. Suppose it has been said that the fund has to be utilized for purpose of, say, augmenting the working capital, or say it is for purchasing a specific machinery or for any specific purpose. That money is utilized actually to repay the loan of another borrower. So our promoter has not taken away any money to his home, but still it is a major problem. It is a non-compliance to my terms and condition, and this may, and rather to a large extent it would result in a problem in future, because you are not utilizing the fund for the purpose it was supposed to be there. You will not be able to earn money from there for which it was supposed to be. and it is getting used for something else. Even it is being used for repaying to other lenders, it means they are doing more of recycling. So the borrower is not having the capacity to generate the money from their business and do the repayment. So the new money is being borrowed to do this recycling of the money and to do this topi till the time it works upon. Later on, it will become a problem. So end user fund at the initial stage is very important to be looked upon. Then we go to the documentation. I think we all are aware on the key documentation which is required before we do the disbursement. So all the loan documentations which are required, the DP note, loan agreement, letter of guarantee, it has to be vetted by the legal expert. It should be this for the same amount, for the amount limit sanction basically. Fresh loan document should be obtained for all the change in limits, etc. Original agreement, share certificates, title deed, title clearance, valuation report should be kept on record. In case of third-party borrowing against fixed deposit, that we have to see that there's no rate of interest should not be given at a concessional rate. So all those things has to be seen with regard to the document. Documentation should not be blank. It should not be incomplete. There should be no overwriting, no changes, no different things. Documentation must be kept in self-custody and in dual custody of officers. Charge of securities must be registered. This is again a very important aspect. The registration of the charge is really important. NOC from housing society must be obtained, memorandum and articles of association, special documentation for consortium or multiple banking. So all those things, deposits should be lien marked in case of advances against deposit. So all those things, which is the normal case generally for documentation, needs to be adhered upon. You will not spend much time on it. So after documentation, friend, we go the next, because the documentation is done, the amount has been disbursed. So once the disbursement happens, then what next? Post-disbursement things will come into place. And to my mind, the most important thing again, which will start after post-disbursement, is review, monitor, review, monitor, review, monitor. Because when the problem will happen, we don't. It is important that the banks come to know of the problem in the borrower, if any, in time and in advance. I have seen cases where the same borrower, there have been, say, multiple bankers. Few banks have been able to sense it much in advance and have been able to get out of that case, whereas others get stuck. How that happens? Because their review, their monitoring, their mechanism was strong, it was in time, and they were able to track it, understand it, and while the things were not so bad, they dealt with the borrower and they were in a position to go out. So the review and monitoring become very, very important. So what are the things to be looked upon? Whether the renewal facilities are getting reviewed, whether the follow-up are happening for the accounts which are pending renewal, LC issuance, whether the security and stock inspections are happening or not, regular stock statement submission. This we will talk more in detail, but this to me again is very important. One should not take it in only a routine thing that the stock statement has to come, calculation of DP is to be done. That's it. No. This must be seen more carefully, more critically by the bank as well as by the auditor, which gives a lot of understanding about that borrower. So that is an important aspect. Critically review operations every month and every quarter, and try and see that whether there has been excessive cash transactions, which are the parties with whom major transactions are happening, whether there are a lot of related party transactions, whether there are no transactions, dormancy of account, whether the balance is exceeding, whether there is a lot of movement between few accounts of the borrowers. So all those signals will give you a lot of understanding. So that is something which needs to be reviewed on a regular basis. In case if there is a multiple banking, then we should definitely obtain the information from other banks on a periodic basis, say on a monthly basis, that what are their transactions, what are their outstandings, what are their limits, whether they are finding any issue. So all that must be exchanged on a periodic basis with all the banks. Insurance is something which again needs to be looked upon, whether the insurance is adequate or not. Then in the review, it's not only a one-time review, it's a regular review basically. So whatever funds have been disbursed, it has to be seen, as I have said, end utilization of fund. So one is at the initial stage when you are doing the first disbursement, and second is on a periodic basis, like there is a cash credit account. So it is not that it has been done once and it is over. There is a money coming, there is a money going. So naturally, we have to see in regular course where the money is going. If the money is going to the related parties, to their group companies, to lenders getting transferred, we must ask questions. The bank must ask questions that why it is being paid to XYZ with whom you don't have such transactions, but you are giving money. Why the money is getting transferred to other banks? Because then it is very difficult for me as a bank who have given this money to track that where the actual utilization is. So that something gets missed off generally, because if the money is going to another bank, we feel okay, it has gone to another bank, it has not been misused. But that another bank from another bank, where it is going, we don't know, and especially if it is a non-consortium. So that becomes very important to be seen. Then we have to have a periodic review of irregular, overdue, or NPA accounts. Penal interest to be charged. This again, I have seen an important area of the revenue leakage in the banking. Most of the places I have seen, if you find out large accounts, or if you go through large accounts, please check whether the penal interest has been charged for all the instances which has been mentioned in their sanction letter. Like sanction letter is saying, if the stock statement is not submitted by X date, I'll charge penal interest. If the DP limits are breached, I'll charge penal interest. If the outstandings are more than the DP or the limit, I'll charge overdue interest. So whether all that interest has been charged or not. The normal interest, which I have seen generally in most of the banks, it is automated. So you have to see more of the IT control perspective, whether it is designed and defined properly and feed it properly so that it gets charged. But penal interest is still in many of the banks is not an automated process. It is still a manual process. So there are you can say parameters defined whereby the bank or the branch can go and say no penal interest. So then the system will not charge that penal interest on that borrower. So that is the reason I'm suggesting that this penal interest must be charged for all the large accounts which is there in your sampling, to be seen whether yes, is there any breach, is it charged or not. If it is not, then it means it is manually not been done. Then you have to see more from control perspective that what are all the cases where the branch has actually So this is an important aspect to be seen. Then letter of acknowledgement and balance confirmation, which must be taken on a periodic basis. Bills discounted, whether there is any accommodation bills, ECGC and all that, which needs to be looked upon. Drawing power, I was already talking, friends, that the stock statement needs to be reviewed and to be seen critically. It cannot be a very mechanical thing only. So while doing drawing power calculation, we have to see whether the stocks, debtors and creditors have been reported and seen properly, whether the calculation is properly, whether all the old book debts as per sanction norms, it will go, say sanction norm says 180 days, then 180 days, 120 days, then 120 days. So beyond that, it should not be considered. Inventory valuation is done properly. It is matching with their audited financials. So suppose it is not possible to do that immediately, but last year, suppose audited financial is there. I'm doing an audit for March 20, but if I want to see whether the borrower is right in reporting their figures, I'll check at least last March 19 audit figures and March 19 stock statement to find out if there are variances. If it is 5, 7, 10% up to that, I think it is okay, because it is never a perfect stock statement. But if there is anything beyond 5 to 10%, we must see and we must doubt and check further as to what is wrong with it. Fraud review, fraud in advances, again a very, very important part. What could be the fraud? Sanctions without proper application or credit appraisal, sanction beyond discretionary power, disbursement without taking proper securities, unauthorized release of securities, playing with the security valuation, charging of same security to different banks, higher valuation of securities, submission of fake documents, discounting of accommodation bills. All this can be termed as fraud. And so if you find any such case, you need to word it properly. Just don't say only an issue, but word it wherever required, that whether it can result into a fraud or not. One important thing, wherever you can see that there is a CRICL report for declaration of fraud by banks. So all the banks which declare the fraud cases are supposed to report in CRICL for beyond 5 crores. So you can see all that list. So when you do this audit, you can generate that list. You can ask the branch to generate that list and give it to you as to what other cases have been done by other banks. So if there is any such account here, you need to see it absolutely different. We go forward now on the asset classification. So we all are aware when the asset becomes NPA, we have done it for ages now. Overdue beyond 90 days becomes NPA, whether it is term loan. OD and OCC CC is a little different, that where you have to see out of order. Rest all the cases like term loan, bills, securitization, and derivative transaction, you have to say overdue 90 days. For OD and OCC, OD and CC, it is basically out of order. When the account becomes out of order, the account becomes out of order if the outstanding is regularly more than the DP or more than the limit for last more than 90 days. If that is the case, then the account becomes out of order. Or if the credit is not sufficient to cover the interest debited to the account, if the credit is not sufficient, though the limit is, or the outstanding is below the limit, below the DP, but if the credit is not sufficient to cover the interest, still the account becomes out of order and then the NPA. For agricultural, there is two parts, short term and long term. In case of short term crop, if it is interest is overdue beyond 2 crop season. In case of long term, if it is overdue beyond 1 season, then it becomes NPA. We go further now, how to classify the accounts. Basically, what are the standard accounts where there is no sign of any problem, they do not carry more risk. So those are becoming standard accounts. Now, even in the standard account, RBI has given clear definition of SMA 0, SMA 1, and SMA 2. You all are aware on that. I don't need to spend more time on it. So how does it help in auditing? Very simple. The cases which are in SMA 2, the cases which are in SMA 1 will need more attention from auditor in sampling as well as in review while checking the cases which are not in SMA, right? So that has to be seen. So accordingly, you plan that what are the cases in SMA 2, what are the cases in SMA 1, pick more samples from those SMA 2, 1, and SMA 0. Now, asset classification NPAs, again, it is a very same old thing which is there. Like once the account becomes NPA, it remains as substandard for 12 months. After 12 months, it moves towards doubtful assets. From doubtful assets, it will remain in doubtful assets for 1 year, 2 years, and 3 years based on the bucket. Beyond 3 years, it becomes loss assets, or if the security is not sufficient, it becomes loss assets. So once it is identified at loss assets, it becomes loss assets. Otherwise, from doubtful 1 to doubtful 3, it remains in doubtful asset. Some of the specific issues now we will discuss, that how do we really deal with it. First is accounts with temporary deficiency. So suppose there is an account where there are some temporary issues, like last 15 days, the account was more than the drawing power, outstanding was more than the drawing power, or the outstanding was more than the limit, or the stock statement has not been submitted for 1 month, or the renewal has not been happened for 1 month. All such cases, there are some issues, some temporary issues, but these temporary issues will not make the account as NPA. For account to become NPA, it has to be fall in that definition, right? So suppose there is no drawing power for last 15 days, that's not sufficient. If the outstanding is more than the drawing power for last 90 days, then only it will become NPA, not because of these temporary things, not because of some smaller things. Similarly, 1 month the stock statement not received, it cannot become NPA. But yes, if it is not received for more than 3 months, then of course those stock statements cannot be used, and then the account will become NPA. Similarly on the renewal. So temporary deficiencies have to be ignored, and the objective classification needs to be seen. Second important thing, upgradation. This is very, very important, friend. And again, I have seen a lot of errors happening on that. I'll explain you why and how. Suppose there was an account where the overdue was more than 90 days. Say 100 days overdue was there. So it was defined as an NPA, say as on December 19. March 20. Now that overdue has reduced. 100 days has reduced to 80 days. Now it is below 90 days. So whether the account is now standard? In cases where it was not defined as NPA so far, and if the outstanding was 80 days, it will be standard. But if the account was already defined as NPA earlier, and now it has fallen below 90 days, still it cannot be said as a standard asset. It cannot be upgraded. The RBI definition is very clear. Once the account becomes NPA, it can be upgraded only when the entire overdues has been cleared, has been received. If there is any amount pending, it cannot be upgraded. So account to be upgraded, all the overdues have to be cleared, then only it can be upgraded and not otherwise. So this is very important. Again, we have seen that the bank's IT system in various cases have not been designed or not has been defined properly to do this, and there were a lot of errors into it. Then next issue is regularization near balance sheet date. So this is something which is very subjective thing, where you have to check whether suppose there was a case which there was no transaction at all of a sudden, as on 30th March or 31st March, some money is coming and the account is not having overdues beyond 90 days. So if there are any such solitary cases, few cases, we have to see carefully. Is it because that some money has been transferred from the related party on that particular day, try to save it, or is there really operations happening and the company is in a position to pay? So then those subjectivity can come into play over here, and we need to see those regularization near the balance sheet date very carefully. Some other issues like classification to be borrower wise and not facility wise, I think this is the same which we have seen for last many years. There's no change into that, so I don't need to spend time on it. Advances against term deposits, NSCs, KVPs, IVPs. So as per RBI guidelines, these need not be treated as NPA provided adequate margin is available. So if there is some case against which, say, I've given a loan of 100 rupees and I have a fixed deposit in my bank of 120 rupees, so naturally I'm 100% secured, and the day the bank would like, they can adjust it against those deposits. So such cases should not be treated as NPA. Advances against gold ornaments, government securities, and all other securities are not covered by this exception. So the normal NPA guideline will apply for that, right? Then advances to primary agriculture, I think that is the same one. Advances against consortium arrangement, right? So again, so far as the consortium is concerned, it is possible that there are, say, 10 banks in one consortium. It is possible out of 10, 2 are showing the account as NPA, 8 are not showing. Why? Because RBI guidelines says you have to see your individual bank recovery and not based on what the other banks are having. So based on individual recovery, you will show it as an NPA or not an NPA, not based on what the other bank is doing. However, if out of 10, 2 banks are showing as NPA, it means there is something wrong with the borrower. He may be paying you now. He may be paying you now, but it is important that there is no major sickness with this borrower. So such cases where there is some consortium bank which is showing as NPA, please see that account very carefully. Is there something more which we need to check as per auditor? Is there something more which we need to do as an auditor? And if you find other issues which does not give you comfort, then you can definitely insist and ask the bank to treat those accounts as NPA. Right. Okay, friends. We go to the another aspect now, erosion in security value. This again, even now, is a major issue in all the banks, right? I'll just explain it a little more in detail. What RBI says or what the guideline says, there is a way you have to move the account from standard to substandard, substandard to doubtful 1, 2, and 3 based on the age. We all know and understand that. But that need not be there in case of significant value erosion. If the value erosion in the value of security is significant, then you need not go by the same norm. Like there was an account which was standard. It has become NPA now. So what it will be? It will become substandard first. But in case in that account, the erosion in the value of security is more than 50%, then the account will not go to substandard. It will directly go to doubtful category. That is what the norm says. So if the erosion in the value of security is more than 50%, account will directly be classified as doubtful. If the erosion in value of security is more than 90%, then the account is to be directly classified as loss. It will not go to substandard, doubtful 1, 2, 3, and then loss. Directly, it will be treated as loss. Similarly, if more than 50%, it will not go to substandard. It will directly be treated as doubtful. And there is a significant implication of it. Why? Because the moment the account becomes doubtful, the entire unsecured portion needs to be provided 100%. Whereas in substandard case, it is not so. So the impact on the provisioning becomes significant for the bank if the account is moving from standard to doubtful rather than standard to substandard. This is something which is again a very subjective thing. You need to see carefully in all the large cases selected by you that yes, there is no such erosion in value. You must document and check the erosion in value of security for all the large cases samples which you have taken. So how would it work? Suppose the account itself was given unsecured, then there is no erosion in value of security. Erosion in value of security comes, say, now the account, say in December 19 was standard and the total value of security mortgaged by the borrower to the bank on the, say, stock, debtors and tangible assets is, say, 100 rupees. Now the account has become NPA as on March 20. But when I check the value of security which is available, whether it is by way of stock, whether it is by way of debtors, whether it is by way of tangible securities, I find the value of security is only 30 rupees and not 100 rupees, which was there as on December. So what has happened? From December to March, the security value is reduced from 100 to 30. That is the erosion of 70%. More than 50% erosion has happened. In such case, the account will not go to substandard. It will directly go to doubtful. And the 70 rupees, which is the erosion, say the outstanding is also 100. So 70 is unsecured portion. The 70 will be provided 100%. And that 30, which is a secured portion, will be provided based on doubtful category, whatever is required. So this is a very important aspect which we must see at the time of our review of major cases. Then fraud. If there is any account which has been declared as a fraud, then irrespective of security, mind it, irrespective of security, the entire amount needs to be provided over 4 quarters maximum. Security is immaterial into it, right? Moratorium cases. If there is any moratorium in any case, naturally your due dates will start after the moratorium period. So as per sanction terms, the amount is not due for 1 year. So there's nothing which is happening in 1 year. After 1 year, once the amount is due, after that you have to check 90 days. Government guaranteed, I think we all are aware that government guaranteed cases, what we need to do. Only thing is, this becomes NPA only when the government repudiate, we know that, but this is not applicable for income recognition. So if the case is such where the money is not being received, account will not be treated as NPA, but income will not be recognized unless and until the money is received. Agricultural advances. To me, this is again a very, very important area. Somehow, since the individual loans in the agricultural advances is small, so it gets ignored. But friends, with my experience of auditing many of the large banks, is that on a cumulative basis, this is a very major impact, right? So agricultural advances need to be seen very carefully. Short-term crop, long-term crop, we have already discussed that long-term crop, 1 crop season, short-term crop, 2 crop season, we have to see, and then only we have to check NPA. So that is all okay. The key problem which we have seen which is happening is RBI has given a special dispensation in case of agricultural advances that in case of natural calamity which hampers the repaying capacity, that the banks will be in a position to defer or reschedule the payment any number of times. So if the natural calamity has happened, say 4 years, every year the natural calamity is happening, or even say it has happened twice and the bank has deferred the loan both the times and there is nothing due, in such case it will not be treated as NPA. So any number of times, normal cases, reschedulement, restructuring means NPA, which is not the case in agricultural advances. So even if it is rescheduled, restructured, it remains a standard. Even there are multiple restructuring, multiple reschedulement, it remains a standard. No problem with that. But the key thing is two. Number one, once it has been, time has been given, whether it has been flagged as rescheduled or not. Because we have seen many cases where because of natural calamity, bank has given more time to those borrowers, but the account has not been flagged as restructured. What happens then? If it is not flagged as restructuring, it will not be disclosed of the restructuring cases, because the restructured cases, the moment you disclose, it shows the stress. It tells you that how much of the borrowers are having stress. So it is important that it is flagged as restructured and disclosed in the notes of the accounts. Number two, that in case of restructured advances, what is required? The provisioning increases. Though it is standard, the provisioning increases. There is a 5% provisioning required for restructured cases or rescheduled cases. So that 5% provisioning will also be missed if those cases are not flagged as restructured or rescheduled. So whatever branch we are doing, please ensure, please check that agriculture advances are classified properly, number one. Number two, if it is restructured, it is flagged properly and provisions and disclosures have been done. Second issue, one is the flagging. Second issue, that whether the restructuring has been done by going through norms of RBI. We have seen many cases that it is actually not fitting with the case to be restructured, because RBI has given various norms that yes, it can be done only if there are no overdues. It can be done only if they have been complying with the norms, if the security is created. So all those norms which RBI has given. So whether that has been complied with at the time of doing restructuring or not needs to be seen. If that has not been complied with, then it cannot be treated as structured, it cannot be treated as a standard, it will straightway be treated as NP. So that is the second important thing which we must see in case of agricultural advances. Individual cases will be smaller amount, but if you find issues of flagging, then you can see the overall population whether it has been flagged properly or not. If you find issues that it is not classified properly, you can see overall population whether it has been done properly or not. And on overall basis, this is a major issue and various impacts. Then we go further on takeout finance. I think this is the same scenario which is there. In case of takeout finance, the asset classification will continue the way it was of the bank or the institution which has given you the loan, and the NPA will be classified from the actual date and from not the day when you have takeout. So that is the simple thing. In that, generally, very few branches you will find this, except in few large branches. Post-shipment suppliers credit. So there are advances which are post-shipment where ECGC cover is available. In such cases, Exim Bank guarantees the amount to be paid to the bank within 30 days of invocation. So if there is any default in that, the bank will do the invocation, tell Exim Bank that there is an ECGC cover, this borrower is defaulted, pay me money, the Exim Bank will pay within 30 days. In such cases, to the extent the payment has been received from the Exim Bank, it should not be treated as NPA. So maybe it is money is received lying in some other account, still we need not make or treat that portion to the extent the money is received as NPA for asset classification and provisioning purposes. Export project finance, the actual importer has paid the dues, right? What is happening? There are some practical difficulties into it, that the actual importer has paid the dues, the bank in turn is enabled to remit the amount due to some political development. So I have exported goods out of India. My importer has paid the money in foreign to my bank, but the bank is not able to remit the money because of some political reasons. If there is any such case where it can be established that those are the genuine issues, then the classification may be made after 1 year. So this is a special dispensation given up to 1 year of the amount being deposited, the account should not be treated as NPA, and thereafter it will be treated as NPA. Advances under BFR and all that not permitted to be upgraded is the same, no changes. Credit card account, there's no change in the same. It is the same, that minimum amount due. Remember, minimum amount due has been paid, and if it is not paid for 90 days, then the account becomes NPA. Projects under implementation. This is another important area where there is a lot of guidelines, a lot of issues, so we need to see very carefully. I am not talking of restructured assets here. That is separate. Projects under implementation is separate. So in case of projects under implementation, we have to see the date of completion and date of commencement of commercial operation. These are the two important. So I have given a table here in this slide. If you can see that how do we really deal with it, because there are a lot of conditions given into it. So if there is a DCCO, which is the revised one or the original one, in case of infra loan up to 2 years it is allowed, it will remain the standard. In case of non-infra loan, 1 year it is allowed. If there is a court case going on with this, then additional 2 years in case of infra. Only in case of infra loan, additional 2 years. In case of non-infra loan, nothing. Other reasons, additional 1 year can be given for infra, whereas for non-infra, it can be given additional 1 year, but for non-CRE. For CRE, nothing can be given. If there is a moratorium of interest, it should not be beyond 2 years for infra and not beyond 1 year for non-infra. These are the broad things which need to be looked upon. Difference again is that in case of DCCO up to 2 years for non-infra and 1 year for non-infra, it will treat as standard with provision of 0.4%. In case of other standard, though cases, court cases and other reasons, though it will be treated as standard, but provisioning requirement will be 5%. So next slide, we are only giving the conditions, when it can be done, it cannot be done, what are the things which need to be looked upon, that there are no related party restructuring, new management should have control more than 51%, repayment schedule not beyond 85% of the economic life, option of available only once and not in subsequent change, and all that has been given into it. Other points in the project under implementation is if there is a change in the repayment schedule due to increase in the project outlay. So it means that the scope, there's a change in the scope and size itself. Then in that case, it is not treated as restructured. What is change in the scope? First, that the change in scope and size should be before DCCO. Rise in cost is more than 25%. Viability has been reassessed, and new rating is not below the prior rating by more than 1 notch. In that case, it will not be treated as standard. It will not be treated as restructured asset. Now we go forward, friends. Income recognition, interest recognition. I think we all are aware on it. We know that if the account becomes NPA, in that case, we cannot recognize the income. It will be only on receipt basis. Similarly, if there is some amount which was recognized earlier when the account was standard, now the account has become NPA. In such case, the amount which was recognized but not realized so far will also be reversed. So the entire income recognition will be on cash basis for all the NPA cases and not otherwise. What about fees and commission? Similarly, if there are some fees and commission which was recognized as income on accrual basis, but the money is not yet received and the account has become NPA, that will also be reversed and to be recognized only when the amount is received. One important thing in this which I wanted to tell you is that in case of restructuring, many times many banks charge some fees for restructuring or charge some commission for restructuring. This one-time fees which they charge, and they recover that money before they do the restructuring. There is a significant amount many of the time which they recover. Can that entire amount be recognized as income because it is received? No. So in case of restructuring, if there is any fees or any commission which is received for restructuring, for renegotiation, for resettlement, in that case, that fees or income has to be recognized over the period of restructuring, over the period of resettlement, and not on upfront basis. So this is very important, which needs to be seen. Provisioning, again, I think broadly we all are aware that lost assets 100%, doubtful 1 first year is 25, 2 to 3 is 40%, beyond 3 years is 100%. That is the provision required. While doing doubtful, unsecured portion gets provided 100%, and only on secured portion this 25 and 40 will come into play, not on the secured portion, right? And remember that in case of security erosion, what happens? The account will move directly to the doubtful or loss based on the requirement. In case of substandard, provisioning requirement is 15%, but in case if it is unsecured ab initio, it means it was unsecured from the very beginning itself, it was supposed to be unsecured. In that case, for substandard also, the requirement is 25%. And in case of infra escrow arrangement, the requirement is 20%. NPA provisioning, we have seen there is also a requirement of provisioning on standard assets. So there is a different percentage given for different items. Like if it is farm credit to agricultural activities and SME, it is 0.25%. Commercial real estate is 1%. CRE residential housing sector is 0.75%. Housing loan at teaser rate is 2%, though that is withdrawn now broadly. All other loans advances is 0.4%, and restructured and reclassified accounts are 5%. That is the provisioning requirement which is there. Unhedged foreign currency, I think we have learned over the years now. So based on the requirement, the provisioning for unhedged foreign currency needs to be done. Floating provision is important area that generally comes for only the central statutory auditors, not for the branch auditors. But for central statutory auditors, it needs to be seen that there is a defined and designed policy by the board of directors for floating provisions, and the bank should hold only as per that policy. Proper disclosure as per requirement is happening. Utilization is not permitted for the like this account I need and you withdraw and you know. It's only for some contingencies and some specific need as approved by the board of directors, like some civil unrest or some exceptional credit issues, then only it can be done and not otherwise. Some other matters relating to provisioning, like if there are some advances granted under rehabilitation packages approved by BFR, what will happen? The provision which is already done should continue. It should not be withdrawn unless in the account that's treated as upgraded as a standard, so it will continue. Additional facility given to such cases, if any, that will not be treated as NPA. We have to go from the record of recovery for the new additional facilities, and it will not be treated as NPA up to 1 year at least. After 1 year, still the other problems have not been sorted out and continues an NPA, then this will also become NPA. The rest, I think we have already discussed on this. CGT, MSME, and Credit Risk Guarantee Fund, no provision need be made towards the guaranteed portion, only the balance proportion to be provided as required. Provision for diminution with regard to the restructured cases, diminution in value. So that is again a very subjective thing, because you will have to check that what is the benefits granted during the restructuring and what are the diminution in value on account of that. There is a clear formula given based on which the calculation needs to be done and the provisioning needs to be done. Country risk provisioning again is something which need not be done at the branch level. It only the data is given at the branch level. It is actually done central statutory audit level. PCR is again something which needs to be seen at central statutory audit level, whether the bank is having the total provisions based on the requirement of RBI or not. Those disclosures and other stuff needs to be done at a central statutory audit level. Now we go to another important chapter before we go to some of the cases and some of the questions. That is on the restructuring, friends. So in restructuring, we know that what type of restructuring are there. Now, the last few years now, it is very clear the banks, once they restructure the loan, it will become as NPA, except for few cases like agriculture and all that, where there are a specific exception or exemption. All other cases of restructuring, once you restructure the account, it becomes NP. Number one. Number two, you cannot do the restructuring with retrospective date. It has to be after the date when the borrower has given an application and not the retrospective date. Any changes or alteration on any restructuring to be approved has to be with formal consent of the debtor. You can't do it on a unilateral basis on your own, which was happening earlier in some cases. Financial viability will have to be seen. Reasonable certainty of repayment from the borrower will have to be seen. Borrowers indulging in fraud or malfeasance will still be ineligible for restructuring. They cannot be treated for restructuring. Right. Once the account is treated as NPA based on restructuring, it will continue like that unless and until the satisfactory performance is evidenced. So after 1 year, if the satisfactory performance is evidenced, then only the case will be upgraded. Otherwise, it cannot be upgraded. And in such case, where the satisfactory performance cannot be evidenced, the account will go for the natural progression from substandard to doubtful and others as per the original terms and not as per the revised terms. That becomes very important. Friends, based on whatever we have heard or understood or learned so far, there are a few questions which I am going to have first, and then I can take your questions. So if this would have been a workshop, we could have discussed it one-to-one. Here, I will only raise the question and I will only try and answer that from my perspective on it. And then at last, if you still have any perspective, we can discuss that. First one is, we all know that what we do, that generally the fund-based outstanding, whatever is there, and if the account is NPA, substandard or doubtful or loss, we make provision for that. What about the accounts which are NPAs, right? It is having an 100 rupees fund-based and 40 rupees non-fund-based outstanding still. It means there are 40 rupees of LCs or BZs which have not yet been invoked. So it has not yet converted into fund-based. So what do we really do with those? Just think about it, friends, whether we need to make any provision for that as well. So presently, as per RBI guidelines, the provisioning is to be done only for fund-based exposure, not for non-fund-based exposure. But we have one standard from ICI, that is AS29, which talks about that if there is a reasonable certainty, which means more than 50% chance that your contingent liability will become actual liability. This is like a contingent liability because there's an NPA and I have given a non-fund-based commitment, and tomorrow it may result into an actual liability. So there is that contingency coming into it. So in such cases, in my personal view, the auditor needs to review and see that what are the chances for those non-fund based amounts to be converted into a fund based amount and a loss to the bank. If we feel that yes, these are also going to be invoked, which generally is the case, and the branch or the borrower is not having enough security, or there is going to be a major loss to the bank, in my personal view, we need to insist to the bank, asking them to make appropriate provision in that regard. That would be required in my view. If there are frequent or continuous, second point, I'm coming now. If there are frequent or continuous excess allowed in the account, right? And the accounts are being brought down below limit for few days in a quarter. So as you all know, so for cash credit account, if the account is out of order or the account is or the outstanding is more than the limit or drawing power continuously for 90 days, then only the account becomes NPA. Now, in many cases, what do? They play with this. How do they play with this? They bring that account below limit for few days, 1, 2, 3, 4, 5 days in a quarter. How do they do that? Again, there will be some credit coming from some account. So that credit has come, then again the amount has been paid. So those are not the genuine transactions, those are not the actual operations. This has been done or designed just to bring that account below limit for few days, because the borrower also knows otherwise the account will become NPA. The bank is also pressurizing them. So the amount is coming only for few days, again going out. There are actually, there is no cash flow, and the account is being kept below limit only for few days, and again overdrawn is given, or the amounts are being paid from that account. This can even happen if suppose one borrower is having 4 or 5 accounts. So one account to another account you can transfer money, bring it below limit. Then that account to another third account you can send that money and bring it below limit. That way it can be managed in a manner or played in a manner so that all the accounts during the quarter has at least for few days come below limit. In that case, system will not pick it as NP. It will be treated as a standard because system is going by a definition. So there the role of the auditor comes into play. We need to definitely and carefully see that all those accounts where there are some credits coming for few days, we need to take out those lists. We need to find out those cases and see whether those are genuine credits or these are only interplay movement between group companies or even outside parties. One can say that on paper it is not a group company or not a related party, but it has been used in a manner to bring the account below limit only for few days. If there is any such case, this to me, this is a more serious case, because then the window dressing was planned into it. Then the borrower, and maybe in some cases even some bank people have been involved into it to see to it that the account is kept below limit for few days so that it cannot be defined. So such cases needs to be looked upon much more carefully, much more in detail, and to be not only classified as an NPA if I find such cases, but also to report critically in my LFAR. So the bank management at a senior level can see that what was going into it, and how do they plug their control weakness into it, or how do they strengthen their system to see that such cases are not happening at other places and such window dressing is not happening. This to me is very important. Third one, which I can talk about, suppose there is an account which has become NPA for the first time, right? This we have already discussed, but this is just a question just to refresh ourselves. It has become NPA for first time on 1st September, say. Outstanding is 50 crores. Security value, say, is eroded now, or it is a lower. Say security value at the time when the account was standard was 50 crores. When it has become NPA, it is now 20 crores. Suppose. In such case, how do we treat this account now? What will be the category of account? Account generally will move from standard to substandard, right? So if it has become NPA, in normal case, it should be treated as substandard because it is becoming NPA for the first time. But as I have said before, that if there is an erosion in the value of security beyond 50%, then the account should not go to substandard. Account should go directly to doubtful category. And that is what I want to again focus here, that since the security at the time the account was standard was 50 crores, when it has become NPA, we assess the security and we find it is only 20 crores. It means there is a deterioration. How the deterioration will happen? Say there was an inventory which was there at the time when the drawing power was calculated and the account was standard. Now that inventory is sold, money is recovered, utilized somewhere else, diverted somewhere else, security is not there. Debtors, money is realized, used somewhere else, security is not there. Or the debtors are becoming more older now, say it is beyond 120 days, 180 days, and is sticky now, recovery is doubtful. Again, there is a major erosion in the value of security because I can't treat those debtors which are not realizable as security now. So there is an erosion in value of security. Or we find out that the security which was given, say, building was mortgaged to me. Value at that time was treated as, say, 100 rupees. Now the account has become NPA, bank has again got it revalued from a valuer to find out what should be the realizable value. We find, no, the value was not 100, the value is only 40. I don't have buyer in the market beyond 40. So there is an erosion in value of security. All such cases where there is an erosion in value of security and the overall erosion in value of security is beyond 50%, the account will straightway move to doubtful. Once moves to doubtful, 100% provision for unsecured portion and provision for based on the category of the doubtful, then you have to make the provision towards standard portion. What do I say by the security portion? Right. That is very, very important and critical. Next point which I want to raise is granting more time for repayment of housing loan or reducing the EMI, whether it will be treated as restructuring or not. Think about it, right? So the point is, if I have given more time for restructuring of a housing loan, whether it is treated as restructuring or no. Again, a very debatable question whether it will be treated as a restructuring, because if it is treated as a restructuring, then what happens? Nowadays, once the account becomes restructured, it is treated as NPA. So whether a housing loan will be treated as restructured or not. So I think, as per my understanding, if it is because of change in the interest rate, if it is because of change in some overall policy of the bank, which is there applicable for all the borrowers, in that case, it will not be treated as a restructure. But you have to give more time to a borrower because of the sickness of the borrower, because the borrower is not in a position to pay, because the borrower has requested, give me more time. In such cases, those are individual cases where the time is given because of their sickness, because of their inability to pay, because they don't have cash flows. Such cases should also be treated as restructured, and in my view, appropriate provision to be done accordingly. I go to the next point now. Why is it not moving? Okay. Okay. Penal interest, I've already discussed. I will again reiterate, number one, that we have to check the penal interest and overdue interest wherever it is missing from revenue recognition perspective very critically and report that. There's one more issue I want to discuss with you. Say there was an account where the penal interest was to be charged. Bank has not charged it, right? If bank would have charged this amount, and in other cases there are other dues, but it is beyond 90 days. It is not beyond, it is below 90 days, actually not beyond 90, it is below 90 days, it is not beyond 90 days. Now, if this penal interest would have charged, the overdue would have been more than 90 days. And the bank has not charged the penal interest. So it is resulting into less than 90 days and the account is on the standard. What do I do with it? So point is very simple. If I have not charged, I should charge number one. If I charge, I account for it, account is becoming more than 90 days. So the account should become NP in such cases. So this is again another challenge, that how do we really deal with such cases, which needs to be seen on case-to-case basis. Next point, excess credit facility given to borrower for which additional documents have been executed or not executed. Both the cases can come. So suppose I have given an additional credit facility for which additional documentation has also been done, but this excess credit facility has been utilized to regularize the defaults and not for actual utilization purposes. Again, if you will see RBI guidelines, this will be treated as evergreening. This is another one of the issues which has happened in many cases, which has been discussed in many cases. So such cases where additional credit facility has been given and that excess credit facility is utilized to regularize the defaults, so it will be treated as a evergreening unless and until there is some very, very justification and we are very satisfied with a separate issue. Otherwise, generally it will be treated as a evergreening, and all such cases needs to be seen very carefully. In my view, most of those cases will fall under the definition of NPA. Next issue, suppose there is an account which was substandard as on March 18 or say March 19. Account is still NPA, right? In sense, account is still NPA in a sense that account is still NPA in a sense that is a substandard. So after a year, whether the account has to mandatorily move to D1 or no. It is seen, if you go and check cases, you will find cases which were substandard as on March 19 also, and which has been classified as substandard as on March 20 also. In my view, all such cases where the account was already NPA as on March 19 or any day, substandard as on March 19, if it is March 20, we have to see very carefully all such cases, why this has not moved to D1, why this has not moved to D1 and why it has not moved to doubtful. So we have to be really careful on this, and we really have to see this very, very carefully. We have to see this very carefully to see that such accounts are being mandatorily and to be looked upon very carefully. So there are various other cases, friends, like that. Like suppose a bill is discounted and payable after 90 days. In case of non-payment, the borrower has requested to extend the due dates. Bank has given them another 90 days. Again, there is a default. Again, the borrower is coming. How many times it can be done? Whether it will be treated as restructuring or not, we have to see that very carefully. So this type of case we'll have to see from case to case, genuinity of the case, correctness of the case, and not on an overall basis. But if it has been done just to avoid it, in such cases, naturally we have to treat those accounts as NPA and not as a standard. If there was some specific reason, some specific and genuine reason to give them extended time because of business reasons, it can be treated accordingly. But generally, most of the cases you will find is because of sickness, because of non-payment, and the time is given. All such cases will move into NPA cases. Okay, now we move forward. Term loan installments paid by debiting overdrawn CC. Have you seen that in any of the case? So broadly, suppose a borrower is there which is having a term loan, which is having a cash credit. Term loan amount has become due, right? When it has become due, the term loan, what I have done, I have recovered the money by debiting my overdrawn CC limit. Now the CC limit is overdrawn, say for last 30 days only, not for 90 days. But since the term loan has become installment of the interest has become due, you have debited to overdrawn CC and recovered it. So in a process, what is happening? Term loan account is not going overdue, and CC account is shown overdrawn, but it is only for last 30 days. In both the parameters, when the system will check it, they will say it is standard, because term loan there is no overdue beyond 90 days. CC, it is overdrawn below 30 days, so it will show as standard. But the question is whether I can recover the term loan installment and term loan interest by debiting the overdrawn cash credit. To my mind, no, because it is already overdrawn. You just cannot recover from that. You just cannot allow them more money out of the cash credit account. And if this is not done, and the installment due and interest due of term loan is beyond 90 days now, because you have not debited those two cash credit, in my view, the account will become NPA. Think about it. I think this is something which is again in many banks is an issue, and we need to really see it carefully. Now, next one is with regard to the upgradation of account. We already discussed, but with an example, we'll discuss now. A term loan was downgraded on 28th February as NPA, since they were overdues for more than 90 days. Now, by 25th March, the borrower has paid some amount. 28th February it is NPA, 25th March, borrower has paid some amount. Now the overdues are only for 60 days. Can I upgrade it? We have already discussed it. So just refresh yourself, think about it, whether I can upgrade it, because now the overdues are less than 90 days. It is 60 days only. So can I upgrade it? The answer is no, we cannot upgrade it, because the RBI guidelines are very, very clear. You cannot upgrade any NPA unless and until the entire overdue amount is cleared. So in this case, overdue is there still for 60 days. So upgradation cannot happen. Upgradation can happen only when the entire overdue is cleared, not otherwise. I hope I am very clear on that. Next, one of the CC account is having limit of rupees 60 lakh. The outstanding in the last 90 days, limit is 60 lakhs, outstanding is less than 50 lakhs on all the days, right? However, the interest amount debited during, say, in this 3 months is, say, 1.5 lakh or 2 lakhs, and the credit is only 1 lakh. What will happen to the account? DP is there, DP is 60 lakh, limit is 60 lakh, outstanding is never crossed 50 lakhs. Interest debited is 1.5 lakh. Total credit in 90 days is 1 lakh. What is going to be the category of account? Though the outstanding is below limit, below DP, still, since the credit in the account is less than the interest amount debited, and hence the account will be treated as NPA and not a standard. This is again something which still in various banks gets not flagged properly because of system issue or otherwise. So we can see that carefully to see that those accounts are classified properly. Last case which I would want to discuss is, suppose a branch manager is granted an ad hoc limit to a client after the necessary document, and the amount is used towards the overdue of an associate company of the client, not for the same client but for an associate. So a borrower has 3 parties. Earlier, A was the borrower of a bank. A was having a problem, he was having default. Borrower came to branch manager, says, I have a B company also, give me loan there. And if you give me loan there, I will see to it that that amount is moved again to A and the overdues are cleared. Can it be done? I think very clear answer, no, it cannot be done. This will be a violation. This will be a wrong utilization of fund. And in all such cases where any such things are happening, the account is bound to be treated as NPA and not as a standard asset. But how do you really find those cases? It is not easy because system will not pick it. There are two different borrowers, right? So as I have said, all such cases which are SMA 2, SMA 1, there are solitary credits, only few credits coming. We need to check the source of those credits. If you check the source of those credits, you will come to know from where it is coming. You can check that, okay, it is coming from party B. Who is this party B? Is it a borrower of the bank? He is also a borrower of the bank. A new amount is sanctioned to them. You can establish that link. You can find that link, you can establish that link, and you can tell about it, that this is how this money movement has happened. And accordingly, in such cases, it is not only that you will treat the account as NPA, you will in fact even report in your LFR, in your audit report, so the bank can take necessary action for all such cases. So friends, these were some of the key issues which I thought I'll discuss with you. I'll brief you so that we all are on the same page. The last slide is on the reading materials, what all we should read while we doing the audit. Of course, as I have said, while doing the planning, we must go through RBI circulars, notifications, and directions. But when we are doing the audit, at that time also there are various things which we can read and see that we are complying with all the norms. So I'll suggest that once we do the audit, once we start the audit, we must take copy of all the concurrent audit reports if there is a concurrent audit happening in that branch. Last year, the statutory audit reports, what were their observations, what were there in last year LFARs, RBI inspection reports, if any RBI inspection has happened, not only in this year, but in last 3 years, we can take that and we can go through that and find out the observations. The stock and debtors inspection report, so whatever cases there is a stock audit has happened, we must go through and we must see that. IT audit if there is anything, special audit if any is done, any manager handover charge if there is anything written there. So all those things can be seen and reviewed and gone through, which can give you some hint on some of the cases which needs to be looked upon. We must read the bank's internal circular. We must read the annual closing guidelines and familiarize ourselves and see that we comply with all of them. One important thing which I will suggest is there is a guidance note on audit of banks by ICI. This guidance note gets generally updated every year. There is a team which works on it and they work to see that all the latest RBI guidelines, all the latest standard on auditing which has come across are all being figured upon, and accordingly all those items are being updated in the guidance note. If you go through the guidance note, it will definitely help you and help you a lot to see that how do I see and what do I see, where do I focus, what are the key things to be looked upon, what should be the audit strategy, what should be the audit documentation, how do I maintain my documentation. All those things will come into play. So I'll strongly suggest you to go through that guidance note, which will help you a lot. Delegation of authority is another thing in the bank which you must see to find out whether it has been done accordingly or not. So friends, these were my thoughts. I'll take a pause now and then we can start with question and answer. I can go through the questions in the chat if anything has come, or if anything is told by Chintan Bhai or anybody else on this video, we can discuss that and we can discuss and see that what are the views on that. Yes, Chintan Bhai, if you have to say something. So should I take the questions which has come into the chat?
Yes, because you should take the question come in the chat.
Okay. So I'll start from below basically. Whether unsigned sanction letter in Word file can be considered if branch people are showing in email from higher authority. Right. So generally we go by the sanction copies only, but in certain cases, if the higher authority, I mean the sanctioning authority itself has mailed that to the branch, and that copy is mentioned in that, and I can see the genuineness of that mail broadly, that yes, it has come from so and so person from official email ID, I think we may rely on that, but that again will be a very subjective thing to be decided on case to case basis and to be looked upon on case to case basis. But generally, yes, if it has come from a higher authority on mail, and I can see that yes, this is a formal mail and this has come from the official email ID, I may rely on it. To further test, if required, we can ask that branch to email forward that mail, and I can also write on that email to the higher authorities saying that we have relied on this and we have treated as a genuine case. That's what my view on that will be. Second one was, please clarify slide 40, first issue again. First issue, slide 40. So you're saying on term loan installments paid by debiting overdrawn CC. Okay, I'll try to explain that again. What I was saying was, say there is a term loan where there is an overdue. The amount, if I'm doing audit in March, suppose, the December installment is due, the March installment is due, right? Both of them are due, not yet recovered. There is also a CC, cash credit account, which as on 31st December was within limit. But say from 1st March, it is overdrawn. Now, as on 31st March, I am recovering my term loan installment of December by debiting this overdrawn CC limit. Can I do that? That was the question. So in my view, since this CC is already overdrawn, it will not be correct to adjust this term loan amount by debiting the overdrawn CC. Because if you do that, then it means term loan for December will not show as in default. It will come to CC. And when you come to CC, you will find the overdrawn is only from 1st March. So in that case, it will not be appropriate in my view, and such cases to my mind should be treated as.
But how to find out that if there is many borrower, how we can find out that this type of adjustment banks are doing?
As I have said, it cannot be done in 100% cases, such type of things. But the sample which you have selected, naturally, all the large cases, we should try and find out if there is any such case. So CC, when you check, so first sign is very clear. If there is a cash credit account which is already overdrawn, and still the branch has allowed that account to be debited. So in normal course of action, it should not happen. No? So if my limit is 50 lakhs and the limit has already crossed 50, the outstanding is beyond 50 lakhs. So other than interest on the CC, there should be no further debit allowed in that account. If it is debit is there, check with why it is there. In fact, in all cases, it needs to be checked. If it is on account of term loan installment, there is a clear problem. If they have allowed some more amount to be debited to the account, again there is an issue. Who has allowed, how it has been allowed, and all that will need to be seen and to be decided accordingly. Second question, Chintan Bhai has written, what are the new timelines for completion? No members have received the branch appointment letters. This is a common question bothering all. I have no answer to it. To be very frank, nobody has any answer to it. The situation is very, very fluid. We all don't know. Only one update in this I can give. Earlier, ministry has given guidelines to the bank that all these nationalized banks are supposed to complete the audit by 15th May. In fact, that was the guideline that they must complete by 15th May. Though the SEBI guideline was 31st May, but the ministry guideline was complete by 15th May. Hold your AGM also within the stipulated time and remit the dividend amount to the bank, to the government. The whole purpose was that the government should get the dividend as early as possible. Now that circular is withdrawn and government has said that go by SEBI guidelines. SEBI for listed companies have given one more month, that is till 30th June now. So naturally all banks have time now till 30th June to complete the audit, right? So they have timeline now. This again will be based on how the scenario is. If everything is okay, say by 30th April, and we are in a position to start, banks are in a position to start the work, In such scenario, 30th June will be a workable scenario. If it is delayed further, I am sure SEBI and banks and the government will definitely extend it further. Next question is, in consortium advance, if in two banks NPA, so that information is communicated to our bank under audit, or that how to fetch that information. So generally what we say for all the large cases under our review, we ask the bank for consortium that please tell us what is your correspondence with those banks. Have you obtained a letter or a mail from them advising what is the, because this is a standard practice even otherwise in the bank. In consortium cases, the banks even otherwise obtain it. If we ask them and if we insist them, they will definitely provide you those copies, that what is the status of those cases in those consortium banks. If we are not getting those copies, naturally we will not be aware. But in that case, when I am making a comment on that advances in my LFR, I can say that there are so many consortium banks, but the status with so many consortium banks were not available. And wherever available, we can report that and mention that. And whichever is available and the account is treated as NPA by the other banks, naturally we have to be much more careful in some cases to see that why the account is not NPA in our bank. In fact, friends, this is one of the important issue which is being flagged, because RBI, when they do their inspection, they have access to all this information. They know that which are the accounts which another bank is NPA, but not an NPA in the bank which I am auditing. In such cases, many of the cases, though blindly they say, or they go through and then say that these are the reasons there in NPA, those reasons are existing here also, other than record of recovery, account should NPA. So this is actually a very important aspect to be insisted upon, to be asked upon, and to be commented upon and to be seen. And if we are not getting it, we must definitely mention it in LFR. And in large case where I have my doubts, I can even mention in my audit report. Next question was, will we get a copy of the PPT? I've already shared with JB Nagar Study Circle. If they wish, they can share with that. Next question is, please update on the new norms due to COVID. So RBI has granted, I'll just give you my understanding so far, because there is no guidance note which has come on it. We will have to really go through more in detail and then see how to go about it. But yes, RBI has asked banks that they can give or grant time for another 90 days for that. So, and they have asked their board to find what they are going to do, how they are going to do. And it is not a blanket thing from RBI side. They have left it on the banks. So in my understanding, the banks, each bank will define their own policy and process in that regard. If they define and say that, yes, they are giving additional 90 days, then as per RBI norm, which is there now, if the banks allow that, then those 90 days will be ignored for the purpose of asset classification. It will be treated as if those 90 days are not there at all. That is what my understanding so far on this is. But then we'll have to see more on the guidance on this, and we'll have to see what each and every bank are going to do, because it is for the banks to do. RBI has allowed. Another question is slide 40, third issue, what to be done if credit summation is less than interest charged in CC account. As I have already said, Pinky ji, this is your question. So as I have already said, if the credit summation is less than the interest charge in CC account, as per RBI definition, the account becomes NPA. That is very, very clear. The account becomes out of order and account becomes NPA. The idea is very clear. The outstanding may be lower than the limit, but if the party is not in a position to pay the interest, in a position to pay the interest in a sense like CC is meant for the regular transaction. If regular transactions can't even cover the interest amount, it means there is a clear case of sickness. So, and that case will be treated as NPA only. Then next question is, if stock statements not received regularly, I think that is defined very clearly in RBI guideline, that 1 or 2 months, if you're not getting stock statement, those are treated as temporary deficiency and no action can be happened on that. But if it is beyond 3 months, then as per RBI guideline itself, you can't give any DP because there is no stock statement and then to be treated accordingly. Next question is, if stock statement figures are having substantial differences with financial statements submitted in last 2 years. Friend, I have already talked about it. This is a very, very subjective thing. In my view, if suppose I am doing audit for March 20 and I find March 19 audited financials and stock statement, there is a divergence of more than say 30%. To me, this is a serious issue. To me, the client is not honest in reporting. If he has been misreporting in March, how do I assume that thereafter he has been reporting honestly? Very difficult. So general assumption which I will take is, if there was a divergence in March also of 30%, if say I assume the same divergence in March 20, what is going to be the status? If it results into a problem, to me it is a problem case. I need to see this account more carefully. I need to see their parameters more carefully. And if I find on my various subjective assessment there is a problem, to my mind, auditor can insist for that account to be treated as NPA. Next question is, if in term loan interest is due on 31st March, which is not paid on 31st March, if audit report is signed after 90 days, they say on 1st July, then whether this loan would be NPA if interest is not paid till that date. Greenaji, you're taking it too far. In fact, scenario is very different. We don't make NPA because that is post-balance sheet status. But the related question to that is, suppose the account was more than 90 days overdue as on 31st March, and the recovery has happened in first week of April or second week of April and third week of April, what to do? Because I am signing report after that. So to my mind, in both the scenarios, whether as on the date of signing report, the account has now become NPA because after 31st March, more days are gone and the party has not paid, I don't think I have to even see that. And to my mind, I don't have to make it NPA. Similarly, if the account was NPA as on 31st March and recovery has happened, say, in first week of April and second week of April, to me, I will not take cognizance of that. If the account was NPA as on 31st March, I will treat it as 31st March, except maybe in few very, very rare subjective cases where the branch can justify or the bank can justify that there were some specific reasons because of which the credits could not come, because of some failure or because of some specific reason, because of which credit could not come. Otherwise, it was supposed to come as on 31st March, it was remitted, but the credit could not come because of some specific reasons. In that case, auditor may take a view, but otherwise, no. Short reviews can be done how many times? Full renewal is not done and only short reviews are done. Yes, Dharmesh ji, this is actually a problem of short reviews. There are cases where the branches are resorting to this practice of doing only the short review and not a full review. To my mind, short review can be done only on some genuine reasons where the financials could not be done in time or some specific reason has happened, and accordingly the bank had to do that. But it cannot be allowed for indefinite time. To my mind, beyond 2 times, definitely not. It should not be allowed at all. Even second time, we have to be justified. We have to be sure that there are justifiable reasons for the branch to do the short review, and that has been done in a very clear manner, in the specific manner. In such cases, only in my view, we can take cognizance of the same, but not otherwise. If I am not satisfied with the short reviews, if I am not satisfied, say 30th September is the last date for the audited accounts, and still the borrower is not able to give audited accounts and the branch is doing short review, I as an auditor will not be satisfied with that. So I will have to make my judgment that why the borrower is not in a position to provide you the audited accounts unless until there is some very specific reason which can satisfy you. Otherwise, to me, no. It needs to be seen critically, and cases beyond 2 short reviews, of course, to my mind, should go as NPA. Even the second short review needs to be seen critically. Then next is restructured accounts. Can it be explained, please? So as I have already said, nowadays restructuring means once you restructure, the account becomes NPA. And then it can be upgraded only once there is a satisfactory performance, which needs to be seen after 12 months. If there is no satisfactory performance, then it cannot be upgraded. It will continue in the original category after. But if that original category, based on the original terms of sanction, whatever will be the original category, it will have to be done accordingly. Otherwise, not. CC each month credit submissions need to be checked, or 3 months to check with interest recovery. To my mind, since it is 90 days, which I have to see what is the credit submission in 90 days and what is the interest debited in 90 days, to my mind, it will need to be seen for the entire 3 months. That is the 90 days I will have to see rather than each month. Each month will have no meaning to me. If in 90 days the credit submission is more than the interest debited, that should be okay. The next question is if turnover does not commensurate with the limit, how it is to be treated for NPA purposes. For example, if limit is 1 crore and total turnover as per GST and as per bank credit, only turnover is 30 lakhs. However, there is sufficient DP due to stock, whether it is to be treated as NPA. So, Jayesh Bhai, this is again a very subjective question in a very subjective manner. It needs to be seen from client to client, from nature to nature. Only because the turnover could not happen cannot be the criteria to treat it as for NPA purposes. If the client is submitting wrong turnover and GST is saying something else, then it is a separate issue. Then it is a integrity issue and the auditor can take a call. But it is possible that in some cases the turnover could not be achieved for 3 months or 6 months or 9 months, but they have a stock line. Just because turnover is not sufficient, I don't think I can treat the account as NPA. But yes, this is an alarm bell. This shows that there might be something wrong with the company. There might be something wrong with the stock figures reflected. In such cases, we'll have to see carefully what the stock audit report says. We'll have to see carefully what the inspection report says. And in larger cases, auditor can also take a call to go and visit and verify whether those stocks are really there. Maybe that there is an over-reporting of the stock. So if you find any over-reporting of a stock, naturally the account will be in trouble and may be treated as NPA. If it's not an over-reporting of stock and there was some decline in turnover because of specific reasons and the stock is there, to my mind, there's no problem. Account can be termed as standard. Summary of the points of relief given by the government due to COVID-19, which we could connect to the current topic. So as I have said, I've already explained that on the COVID. I have said that government, RBI has given the time, and broadly respective banks will decide as to what is their view on that. If they go as per RBI guidelines, those 3 months extension can be given without the account being NPA. On the government relief which has been given to various class of people which they have given, I don't know how it can impact my auditing, apart from the fact that when I do the audit for a bank, our ICI has also come with the implications on any client, any person with respect to COVID-19. So that needs to be assessed for bank as a whole, to my mind, not for a branch. But for bank as a whole, the central statutory auditor will have to assess whether this COVID or this corona thing has going to have a material impact on the bank, whether this results into some more additional provisioning which is required at the bank angle on overall basis, whether this can have an impact on a particular set of borrowers and the bank needs to provide something more. So that needs to be seen on an overall bank perspective, not at a branch perspective. But yes, for a central statutory auditor, it will be very important to see that what is going to be the impact on bank as a whole, and how do we really treat it, whether it is a provisioning, whether it is a disclosure, whether it is referring in the report. We'll have to see on overall basis. Right now it is very fluid. I think we'll have to wait further for further guidance in that and how it flows, and accordingly we'll have to see and decide on that. So friends, I think the time is now 11. So I will ask the organizers to please advise, should I take more questions, or we have to go start with the another presenter who should already be there.
Thanks. The other speaker is already waiting, so
Yes.
definitely the questions would be unlimited. Members would be having it, but we also have already waiting. So thank you, Sanjay. Wonderful session, and it was great having you here. And thank you for consenting this once again. And members, we on behalf of JB Nagar, thank Vikas ji for a great session. Thank you, Vikas ji.
Thank you, Chintan bhai. Thank you so much for inviting me.